All right, welcome back. Today we're going to get into this question on Reddit. And I don't know if there's a bunch of fucking bots trying to upvote this or people actually want a video recording for this, but um, I don't know how to mass reply to all these people. If all these people seriously want this video, like I cannot tell literally if these are bots or not. But what I'll do is I'll just reply to those people there, and then this thread. So this guy's asking like, what do you really need to know to trade? And he's he's like, yeah. I understand you need a discipline, focus, research, all that stuff. Yeah, well, you know, take it with a grain of salt. Like if you think you've done enough research, you haven't. You know, if you think you're disciplined, you're not. If you think you're actually focused, you're probably not. Because the amount of actual focus you need in this business is enormous, dude. Like this business requires so much fundamental focus and discipline that it's actually fucking unreal. Like, but without going into that, because apparently you already know it, what do you actually need to know? And he's talking about like, okay, do you need to learn how to use charts? What indicators do you use? Uh, what it means to go long or short. Okay, so I'm going to assume that you have absolutely no fundamental understanding of trading if you don't even know what long or short means. Now, I don't know if you're trolling or what, but you know, I mean, that's the basics of the basics, dude. Going long or short. I mean, going long is essentially you're buying a security, holding it, hoping it goes up in value. Short is you're shorting, you're borrowing money from your broker to short the security, right? So you're shorting the stock, hoping it will go down, and then you buy your shares back later to profit from the difference, right? So very simple concept to understand. So hopefully you're not trolling in that respect. Analyze earnings. I don't do that. I don't play earnings unless it's like Microsoft or something or Apple, right? And the only reason I'm playing it this time around is because we're in a pandemic and I expect those companies to do well. SEC filings, 10Ks, 10Qs, all that stuff. Again, I'm not reading legal jargon, right? If you want to read about a new company doing an IPO, that's fine. We'll show you a resource that you can use to find IPOs. But yeah, I don't really fuck with the SEC filings because it's just like if you ever read a 10K, it's the most boring shit ever. And I'm not a value investor in that regard where I need to trade that security for years and years and years. I'm in and out, and I'm going to show you how to trade in and out if you're really trying to understand how to trade on the basic level. Now, how do you use level two? So level two, as far as I understand it, is just it's just basically more data on the dome. I don't trade using a dome. Obviously I enter a trade using a dome, but I don't trade exclusively using a dome. Some traders only trade using a dome and like one like 5 minute chart, right? And it's a totally different way of trading. So if you want to learn how to use level two, I think most brokerages it already comes with level two enabled, and if you want to enable level two, you can do that through your broker. It shouldn't be that hard. I used TD Ameritrade with it on this thinkorswim platform. So learn how to tape read. So tape reading, as far as I understand it, is literally reading charts, reading price action, reading the bars, and I'll show you how to do that as well. So yeah, we're gonna get into this. A lot of people apparently want access to this video. We're just gonna go into it by section. So let's just talk about who I am real quick. I'm a trader. I've been in the industry about 5 years. I went full time this year during the pandemic. Uh, the reason why I'm creating these videos, I'm trying to help people, learn how to trade, obviously, but also not make the same mistakes. Okay, I am someone who lost millions of dollars in trading crypto. I lost $4.7 million in 2018 trading crypto. Okay, I trade equities now, and I will remain trading equities probably until fees are zero in the crypto industry, which would be, I don't know, it could be never, right? But unless the fees get down to like basically the fees it costs to buy an ETF, like I'm not trading crypto anymore, right? So because it's like you want to lose your money quickly, you can lose that money in crypto quickly, right? Because it's 24/7. There's no rules. It's still the wild wild west, and yeah. So expectations going into this. So the first thing I would say to really get a grapple on this is expectation. So do not think you're just going to roll in here and look at a chart, right? And I'm just going to move it to the 2 hour because that's what I use to trade. And let's turn off all these moving averages, right? I'm gonna explain what this EMA fan is later, but let's just leave on this and the trend background and Heiken candles, right? So you're not, most people and in order to, let's just get into settings real quick, and then I'll explain expectations. So if you pull up TradingView, which I use, go to tradingview.com, and here's my colors on here. I turn on extended hours. I turn this down. I go to appearance and turn off the vertical lines, and that's pretty much it for the settings. I'm on the West Coast, so I go to time, and I change this to Los Angeles. Okay, and I use minimal indicators. I'll explain what they are. The most importantly being a 2-hour time frame with Heiken ashi candles. Okay, and then you can go in here and also select show real prices. Okay, the other things I use is this trend background, which shows you price squeeze, right? So basically, if it's in the red, you don't want to be holding the security. But there's also and I'll explain the 2-hour time frame and how to trade this, but it also shows you where you can enter, right? You can enter based when there's a huge sell off, when there's a big price squeeze. So the darker the shade is, the more the squeeze on the price is happening. So, and you can line up your entry on obviously the dips here, which I'll show you how that's how you want to trade. So when you're trading a security, if your expectations are like, I'm going to be able to pull up a chart and just automatically know what to do, the chances of you doing that is going to be very, very low, unless you fundamentally only do the following, which is buy low, sell high. So wait for a sell off, right? Wait for a sell off and then buy. Wait for a sell off, then buy. Right? Wait for a sell off and then buy. Now, that's how I trade. I wait for sell offs. Okay, I usually don't let things ride very aggressively because you never know when the top is in, and yeah. So if you the other thing I will do when I trade is only trade big names. So if you're starting off, if you're unable to trade big name securities, I still recommend you get a list of, even if they're stocks that cost between $6 and $20, is I recommend you find securities that have that quality to them and then trade that quality. Because if you trade some penny stock shit, you're going to lose your money quickly. I'm telling you that. Like, you're just going to get fucking annihilated. So do some research, right? And I'll show you how to do the research for those securities, but do some research and find some securities to trade that have some quality to them. So expectations. Do not just expect to roll in here and make, bankroll on your first 5 days of trading. Okay? If you start making money within the first 5 days, you're either applying these principles I'm about to teach you to the T, or you're just lucky. And when I was trading in March, any fool, if you look at this March drop right here, any fool could buy any security. It doesn't matter where you're buying the security in terms of the price. Most securities went up if you bought that quality name. If you just held, you would have made money. But that's basically luck, right? And we need to separate luck from actual skill, because anyone who says like, oh, technical analysis bullshit, they don't know. They either don't know anything about technical analysis, they only trade options or some other type of format of trading, whether they may trade derivatives, they may trade something totally different and removed from the underlying stock, right? Or they trade long only. They'll buy security and hold it for like a year and a half, and they say, well, technical analysis is bullshit. You should just average in every week, $50, and go long for like 10 years, and you can do that. But sometimes things correct so aggressively where the security loses almost 50% of its value, and then you sell into that panic versus buy more on these dips, right? Buy right here, buy right here, buy right here, profit right here, right? You average down, and then you got out up here, right? And yeah, if someone is averaging in over time and they eventually get out when there's a major correction, right? Major correction right here, right? Almost 50% retrace or 100% retracement, right? You see what I'm saying? So expectations, just set up your expectations so you're not like, thinking you're going to turn into a baller, right? First couple days of trading. So let's go to routine. Okay, so if you're truly day trading, hard skills you need, right? Straight up. Like, if you're actually going to do this straight up, you need to be extremely disciplined, as this guy's already said, but in the sense of waking up early. You're going to have to wake up 1 to 2 hours before the bell and do a bunch of fundamental research, which I'll show you how to do, okay? Using certain tools, okay? You need to pick the securities you're looking at, probably not deviate from those securities because there's a million new securities on Reddit. I do not suggest you look for every new security on Reddit, right? It's just not going to help you, right? So routine, waking up early, 1 to 2 hours before the bell, getting that research in. Now, trading psychology, there's books about this shit. I wouldn't worry too much about it because there's a million different trades out there for you. Okay, if you're a swing trader, momentum trader, if you trade on news, if you trade on earnings, there's a million different variables to trade. Okay, but the basics is this: if you apply what I'm showing you here on the charts, there, and you're buying quality securities, if the trade's moving against you, and I'll show you my trading account here, right? And I trade a lot of securities at a time. I don't trade. I trade diversified. Okay, I don't trade one security with 1,000 shares. Okay, that to me is just asinine, and I don't have the net liquidity for it. But you can see here, here's the securities that are in the money. Here are securities that it doesn't show you the securities I cleared Friday, but here's the securities that are in the money. Here are the securities that are obviously just barely out of the money, and here's the securities that are more out of the money. Now, if you look at the spread here, there's like a few securities down here: Amazon, Seagate, C Limited, Beyond Meat, PDD, and the H&R Block. These securities, if you really think about it, they're not that out of the money, right? Like, I can sit here and wait for a $72 loss to clear, right? However, if you're somebody that looks at that and says, okay, well, down, I just opened the trade, I'm down $40, which is Amazon. Like, I opened Amazon Thursday, and now Friday it closed, I'm $40 out of the money. Now, if it's for some reason, if it bothers you that you're somehow, you're out $40, okay, this is trading psychology, right? If that bothers you, then this business is not for you. You should just like not trade, because I'm telling you, like, this is just gonna fuck you up mentally, right? Like, go invest in REITs, go invest in sector indexes, go invest in mutual funds and index securities, and just go to sleep, okay? But to truly day trade, you need to look at, like, okay, I'm down right now, and there will be days, dude. There will be days when on a red day that my account will move $2,000 against me. So I'll have positions on, and then for the day, I'm negative 2,000. I'm negative $1,300. Okay, you just swallow, you just swallow a pill and go back to sleep if you need to, right? You do not need to freak out because the positions are moving aggressively against you. Because every dollar it drops against you, that's someone selling into that. That's someone panic selling into that, who probably is managing a large amount, right? Or is this retail adding so much volume to the selling pressure because they're just trying to get out of the position. Maybe they got in back here and they see it going against them in an aggressive way, and they're getting out and they're liquidating, right? And it's just pushing the price down. But it always gets to a point where the price breaks out and continues higher, right? It always fucking happens, dude. And that's why, I'm long only, first of all, and I do not let, again, trading psychology, I don't let things freak me out in that regard. Now, taxes. I'm not going to get into this. Go talk to your accountant if you need to. Talk to your accountant if you don't understand anything about taxes with regards to trading. But leave money in the bank for taxing. If you think you're just going to roll out and take all your profits out off the table and use that money, expend that money for rent, food, otherwise, you're a fool. Okay. The only time you should take money out is if it's in an emergency. Okay. Your trading account is your trading account. You leave your money in your trading account. Okay, the goal of a trading account is to make as much money as possible, and you cannot do that if you're not compounding the money in your account. Okay, if anything, you should be adding to your trading account. Any excess money you have, you should add to it, assuming that you're not losing money. Okay, now what tools do we use? Because, you got to use some fundamental tools. So we're just going to do this quickly. I'm actually not going to go into these tools in depth. If you want to use these tools, the same tools I use, that's fine. You can use those tools, but don't this video is not going to cover the use of all these tools. So I use Benzinga, which I'll briefly explain. Benzinga Pro. Okay, I'll leave a description in the YouTube, and this is mostly for news. And you just set up your watch list. Is right here. You set up your watch list, which is right here. You go to, so you create a new watch list. Okay, you add all the securities you want. You go in here to sources. You go into watch list and you select your source. Now you have all the news. Okay, all the news, right? And you want to add like the SPY in there as well, because the SPY usually gets the headlines for the Fed stuff. See, Fed SPY. So add the Spider S&P 500. Add the SPY. If you need to find new securities, you can do it by using a pre-market scanner, and you can see, in the pre-market which penny stocks are dropping. If you want to trade penny stocks, small caps, you just change these bars. So this is market cap, right? This is the size of the company fundamentally. So if you want to trade securities that are above $2 billion, which I primarily do, right? I will do something like this. I do not want to trade anything really that is less than $20. So the pre-market, right? What was dropping. So I look at what was dropping, and so just one more time here. So one more time. Here we go. So these are the securities that were dropping hard in the pre-market, like United, right? United was down 2%. DraftKings was down 2% in the pre-market, right? This was, and you can see the update. Like this was updated at, you see here. See the time this was updated. So it shows you the time. So you can also check the aftermarket. So let's see what was dropping on the aftermarket on Friday, right? So this is the aftermarket. This is what was dropping. So stuff that was dropping in the aftermarket, right? Cloudflare, Vroom, like those are companies I'm interested in right now, right? Data, I'm interested in data. I'm interested in store capital. I'm interested that JSK was dropping. So this is a tool you can use. These are tools you can use. You should get familiar with these tools. You should get familiar with Tradingview as well. This is the primary charting software I use to trade, right? And I like it because you can just move so fast through these securities versus you using trading software. Now, I also use thinkorswim, which is TD Ameritrade's native platform. I suggest you just go out and set this up. All right, it's not too difficult to use. Let me go ahead and change this to private up here, so you can't see my information. I'll turn off the lower thirds and quickly go through this, because this can be slightly confusing. So in order to set this up, right, just quickly, you go into, if you use TD Ameritrade, you can set up hotkeys in here and stuff, all this stuff. So let's go to the app settings first. Okay, so you can go in here to set up hotkeys, and the only ones that I would really consider using, I mean, there's a bunch in here, but it's basically to set a market buy order by F1, sell to market F2, and then you can flatten the position F3, and you can reverse the maybe position with F4 if you want to do that. In order to make the program run a little bit quicker, if you want the dark theme, you just go into dark right there. Let's see. Okay, quote speed. You want to set this to real time. Okay. And active trader 3 seconds. And that's pretty much it, right? Now, in order to get your screen to look like this, your screen may look like this in the beginning, right? You go to trade, it'll usually say all products. So you go to active trader, right? And then the active trader tab's right here, and you can set how many of these windows you want, right? So I set 3, and then you can go into the settings, and then you can set what you want each box here to show. And this is how I got it set it up. So bid, buy ask, flatten, cancel, buy. Yeah, so you get the point, right? So I also click on auto send right here, right? So this is the DOM. This is what you look at. This is a price ladder when you're entering trades. So now that that's done, I can turn on the lower thirds back on. Learn how to use this software, dude. Like I said, I'm not going over in depth on how to use, TD Thinkorswim, right? Because people will use Robinhood, people will use a million different platforms. So I'm not exclusively going to go into that. Just this is what I use. Now, let's go back to this so we're staying on track. Risk management. Basically, risk management is, and I'll show you how this will make sense when we actually go into chart reading and bars. Right, but basically risk management is like, okay, if you're trading a penny stock and it moves 30% against you, there's a very good chance that 30% loss will turn into, I don't know, a 60% loss, because you're trading a security no one's ever heard of, right? Risk management is something like, okay, you're trading on a 2-hour, and you're buying up here and you're trying to catch a falling knife. Okay, you're buying a 2-candle reversal, but the security's not even sold off yet, really. Right, so that's what I'm saying. Or you'll buy here, right, and then let's say it goes against you, then you sell into it. And then what I'm trying to say is like there's indicators here showing that the security is starting to get oversold. So you bought here, right? And instead of because you're in a downtrend, risk management, right? So this is a pretty good example. So risk management is going to come down to a few different things. But let's say if you're trading momentum like I do, and you're trading a 2 hour, and this security is getting hammered, and you buy this bar right here. This is the aftermarket right here. This is actually aftermarket. This is pre-market right here. So this security at 7 a.m. gaps up. I know it gapped up because I can see the wick. If you're in a downtrend, risk management would tell you to like sell that security immediately, right? Because there's a good chance that this security can retrace all the way back down to its prior swing low, which is back here. So I can't really teach you risk management in that sense because this is something you're going to have to learn over time, right? Or the other thing is like, okay, let's say it goes immediately against you, right? The next thing would be to buy more every leg down, right? And then you're averaging down, and by the time it pops back up, you can sell into that rally, right? So that's another trick, right? The other thing too is risk management is going to be like, okay, let's say you bought here, and then it goes against you. You buy more, right? And you don't sell out here. You continue buying all the way down on the big dips, right? And the big dips are you're gonna be able to see that with these indicators, but you're also going to see that in the bars. You're also going to be able to see it with regards to moving averages, which I'll get into here in a second, right? Here's the moving averages that are the most important, right? And then they go up to 200, and then the EMA fan will go all the way up to 4,900, which I'll show you here in a second. So yeah, I would learn how to read moving averages, and I will learn how to read bars, but that will help you with your risk management because I can't really tell you when to sell, right? What's your time horizon? Is your time horizon 5 years on the Lockheed Martin? Because I'm telling you, within 5 years, the security is going to $500 because it's Lockheed Martin, dude. Right? It's one of the most well-known defense contractors in the entire world. So if you long hold this for 5 years, and then you're saying, okay, what's my risk management? It's like, well, mate, what's your time horizon? Because right now this shit is probably still relatively cheap compared to where we sold off from, which is up here in the 420s. Now I wouldn't be buying right here because it already took off, but there's so many different levels to the risk management game, and you just need to be aware of your own sort of risk in the market. I don't know how else to say it. Like if you, it also depends on how much money you're managing. Like, so someone who's managing a $10,000 account is different than someone who's managing a $10 million account in terms of risk, right? I would say that some person who's risking 10 million needs to be way more diversified than someone who's running a $10,000 account. So there's a lot of dynamics to risk management, but ultimately it's going to come down to price, which we'll get into. So risk management is taken care of. General market awareness, I'm just going to briefly explain this. I'll explain basically these four things right here. Actually, I'll get into ETF flow. So I'll get into all this stuff right here as a chunk so we can move through this a little bit faster. All right. Okay, so risk management. Okay, we talked about that. General market, just go learn shit about the market. Watch some documentaries on trading. Do some research into like the housing crisis. Do some research into the currency crisis in the 90s. Do some research into the Japanese bubble in the 1990s. Learn about the Bitcoin bubble of 2018. Learn about shit that is just the general market. Learn about the market, okay? General market awareness, okay? I'm not going to tell you what to learn because you should just use some fucking sense here, right? Trading news versus trading price. I will always argue trading price comes first, right? And you should take all news with a grain of salt because price never lies. Okay, if you trade something on news and then immediately the next day shit goes against you, it's because you're trading news. You're not trading price, right? So look if you're like overextended before trading a fluffy news piece. And the opposite also applies. If something was getting sold off really hard and there's some fluffy news piece comes out that tries to pump the price, be aware that you can continue losing money, right? Understanding macro, okay, dude, there's a million websites out there explaining what macro is. Go do some fundamental research into what macro is. I would argue macro doesn't mean that much because you can always trade in any environment. Doesn't matter if we're going through a global pandemic. Doesn't matter if there's a depression. It doesn't matter if there's a housing crisis. You can still trade. So macro helps you if you're a big cat, if you're managing, again, huge amounts of money. Okay, but you should also just generally keep your eye on macro because it just helps you become a better trader. So try to understand what macro is in terms of trading. Understand ETF flow. So this is just very quickly. ETF flow is enormous and it has a huge effect on price. Go learn about ETF flow. Go learn about ETFs. We will explain what these three things are going forward. And I do not recommend you trade options. You can go learn about what options are and how to trade them, but just be aware of options expiration dates. Options expire weekly and they expire monthly. And there's also something called quad witching that expires quarterly. So learn about options expirations, okay, and how they affect price and how volatility increases during those times. Okay, now we've arrived at trading, so I will explain all this going forward, which is the essence of this video. This is what you really want to know. Okay, so all this stuff is out of the way. So just make sure we're not really leaving anything on the table with regard to that. Okay, so now we can finally get into trading, right? So let me explain the settings I use before going forward. So I will put these settings in the description on YouTube. So JS trend background, okay, 1, set the transparency to 80, right? We use a volume profile sometimes. We don't really always need the volume profile, but it's there. And then I use these moving averages, okay? And I'll explain here in a second why there's so many of them. I also use this this indicator here, PP signal. It's a funny name. Oscillator, right? And then I use the FVS, okay, and that's pretty much it. And I just set the colors to basically green and red. Okay, so the first thing you need to learn about when you're trading is trading price. Okay, we'll get into the indicators in a second. Okay, this is going to be extremely simple, dude. Okay, and this is so simple that you're going to feel really dumb about how stupid it is. But this is literally how you need to trade. And this is why, if you look at like my master list here, this is why I keep my eye on so many securities. So I move this down to like right here. Maybe we should show the price, market close, something like this. So this is, if you look here, all these securities, this is a lot of fucking securities, dude. Right? A lot of securities. Shitload of fucking securities, right? What I'm interested is shit that's sold off, dude. Okay, I'm interested in shit that's sold off. So let's look at something on Friday that sold off. State Street. Basically, it says regional bank. I think also State Street does some hedge fund stuff as well. So if you look at State Street, right? And we're gonna pull up a 5-minute chart here because this is what I also use. I use a 5-minute chart, right? So the 2-hour is what you want to keep your eye on because the 2-hour is showing you the big trend, right? The bigger players, right? The bigger trend, right? You want to keep your charts on and at a level like this where you're looking at like a 5-minute for an entry and you're looking at a 2-hour for overall trend, right? So now the question is, why did I buy this security on Friday and where did I buy it? Okay, and I'm going to explain it. It's very simple, right? Now your indicators are going to help you, but the first thing you need to look at is the bars, okay? And again, these are Heiken ashi candles set to obviously green is bullish and red is bearish. Okay, so ignoring everything else, right? And we can just leave it on because that's what I look at when I'm trading. But the first thing I look at is the bars. Okay, the bars are telling me that this security is in a lot of pain. It's clear as day, right? Now the question I have for you is, because I just said I buy shit that's selling off, right? The biggest question is, well, where do you buy? Well, you have two options. Option number one is to try to catch a falling knife, which I did Friday. I bought at the close, which I'll explain here in a second. Or you wait for candle reversals, right? You wait for a sell-off, big, huge drop in price, dude. It's a $4 drop, dude. Clean, straight down, no bullshit, death drop. And you got another death drop here. You got a death drop back here. You get 1, 2, 3, 4 death drops. Obviously, these wicks almost keep you in line as well. So 1, 2, 3, 4, 5 death drops. So the price, I can just do this on a fundamental level, right? And this is just going to take time for you to understand, right? Is the price is likes this level right here, right now. So it's trying to break out above basically 65. It's getting rejected every time. We can see that. right? Now, the reason why I bought is because this is State Street, dude. This is a big company, dude. This company arguably will never go bankrupt, right? It's like buying Johnson & Johnson or Walmart or something. It's just like, it's not going to happen, dude. It's not going to happen during a pandemic, and certainly not going to happen for a very, very, very fucking long time. So I'm comfortable buying on a sell-off, right? So what do you look at when you're buying a sell-off, trying to catch a falling knife, so to speak? Well, number one, the most important thing to do is to wait until the close. And I'm telling you right now, dude, you better fucking wait until about 2 minutes before the close, because securities will sell off aggressively even up to 5 minutes before the close. And sometimes they'll drop literally in the last 5 minutes. There'll be just one more hammer that drops 5 minutes before the fucking close, dude. So this is why I bought the security 5 minutes before the close. Now, this is why I buy up the five. This is why I show the 5 minute chart, but I also will go down into the 2 minute chart sometimes, because the 5 minute and 2 minute is really going to show you the same sort of price action. So you can see here that the price of the security at 12:58 was basically the same price it was at 10 o'clock in the morning and 7:30 this morning and about 8 o'clock this morning. That's why I buy at the close, dude, because there's a very high likelihood, if there's a huge, huge, huge fucking drop, that the price of the security is going to remain at its swing low for the day at the close. And that's where I bought. Now, here's the thing. I'll have an option on Monday, because this security will likely gap up. There will likely be liquidity pushed into it, and the price will go up in the morning, right? And you can see that right here before it dropped, right? This is pre-market selling. This is the drop at this is the liquidity at 6:30. They trapped everyone short, and it pumped again, and I could get out. I'm looking to potentially do that on Monday, right? Now, this is one strategy. The other strategy is I could have waited until there's buying here the next day, right? Huge sell-off, buying, I go long, right? I don't disagree with these bars right here, because every 2 hour bar you see on the left-hand side is 2 hours of buying, and the more bars you get, the more buying that is. So if you look at over here and you say, okay, there's been 2, 4, 6, 8, 10 hours of buying, dude. I don't give a shit if it sells off all day long. I just saw that there's 10 hours of buying. The chances of this security going back to the swing low after 10 hours of buying is very, 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 very small. And I'm telling you right now, the only reason why it dropped is because they're trying to stop everyone out who has weak hands before it takes off, right? And you get that takeoff until it breaks below the 8 or 13 moving average, and it's lights out, right? So we'll explain moving averages in a second. I'll just take off the big EMA fan to show you the basically the green, the yellow, orange, and then red line, and what they mean. So if you follow me so far, all I've told you to do on a 2 hour time frame, without even watching the 2 minute, is to look for a sell-off, right? Look for a sell-off, right? Now, this next thing you incorporate before you go down to these indicators on the bottom here is moving averages. So let's say, okay, Chris, I hear what you're saying, buy a sell-off, but how do you know when to enter? Well, I just said you one variable, which is enter at the close. Massive candle down on the 5 a.m., right? Follow through all the way to the close, right? You buy at the close. This is 11 a.m. This is 2 hours before the day. So your entry would have been down here. Because when you see some crazy ass pre-market shit like this, where State Street is dropping by fucking, just getting fucking annihilated. $6 drop, dude. This is a $6 drop. This is what I call a death drop, dude. Shit like this is a death drop. This should get you interested and happy, because gives you an opportunity to enter the security, because it's getting hammered, dude. Like, someone just profited from this crazy ass move right here, dude. Crazy ass move up here. And this is profit taking up here, dude. This is big profit taking, right? So this allows you to get in, and you can see that the next day, so this is pre-market, so 7 a.m., 9 a.m., 11 a.m. So this is again, they're buying it right here. They're buying it up. I know they're buying it. They're buying up pre-market. They sell it down. You buy at the close, right? Two green bars, take out 2 red bars. You're in the trade. Next day, it gaps down again. You're not freaking out, right? 7 a.m., green bar. 9 a.m., green bar. 2 green bars, take out 2 red bars. You're in the trade, dude. You're in relative to a sell-off. The price flip down here is different if there's a price flip right here, right? But 2 green bars are 2 green bars. That's 4 hours of buying. You're in the trade over here. Let's just focus over here for a second. So now, how do you know when you want to hold a security? Well, it depends on how aggressively the buying, takes off. So in this case, this is just a clean trend up, which you can see, right? And then, this just takes time to learn, but you can see the trend goes up here, right? So, and it's clear as day, right? The price of security is moving up. So how do you know when to get out of a trade? Well, here's your entry right here. This shit just moved $4 fucking in your favor, dude. I mean, unless you're holding State Street for a fucking year or 2 years, you need to get out of the trade at some point. And I would argue that this takes time, but a good rule is that, like, if you had almost like a parabolic run up like that, which may not seem like a parabolic run, but dude, you have to understand, this is State Street, dude. There's thousands of funds out there looking at State Street for a price entry. There's algos that are constantly looking at State Street for an entry. You need to be smart and say, okay, is it time to enter State Street? Okay, it's time to enter State Street because we just got to sell off. We got entry. You had a opportunity to enter at the close here. You had the opportunity to enter at the 11 a.m. wick down here on the next day, and you had another entry possibility here at 9 a.m. So you had 3 times to enter State Street. Okay, when this actually rockets and takes off at 7 a.m., dude, you sell into that, dude. Look at that move. Dude, this move is literally the next fucking day, my friend. You sell into that. You do not sit here and say, okay, like maybe State Street's going to go to $70. Yeah, it may go to $70. When is it going to go to $70? You don't know when it's going to go to $70. Right now, this shit just moved $4. You sell into the gap, dude. This is what's called a gap play. You wait for a sell-off. You pick a big name security like State Street, or you find a security that you like, that you trust, that you know is not going to go bankrupt. So if you fuck up the trade and you're in a bad entry, if you're out of the money, you can average down when there's the next big sell-off, right? But I'm just telling you right now, this is how the professionals play, dude. They're selling into this immediately, and you need to be in with them when that happens. So this is my bread and butter. This is how I trade, dude. Okay. Now, the other way you can do this is you can look at moving averages, which are obviously on the screen. When this starts printing strength above the 13, the 8 and 13 here, it's ready to kick back up. Okay. In this instance, because you had a flat 200, I know intuitively that when this red line, this thick ass red line goes flat, that this is going to be a choppy trade. This is why I'm going to sell into this as soon as it pops up. The same thing here. When this is done selling off, it might take 3 or 4 more days, right? Depending on the severity of the sell-off. If this flips down and sells off aggressively, I will be happy to buy more. I will buy more if the State Street goes down to $50, dude. I will buy this if it's a cataclysmic rip down, right? Because of State Street. But what I'm trying to say is moving averages work only in 3 dimensions. There's an up move with the moving averages where you can see the 200s kicking up and the rest of the moving averages are following. There's a sideways moving action. There's a sideways action, right? You can see sideways movement, which the price of the security is going up and down through it, right? And then, of course, you have the shit you want to possibly stay away from, which is what happens when the price of the security dips below the 200, which is that big thick red line right there, right? And obviously, when the price is below the moving averages, right? The 8, the 13, the 20, the 30, the 50, the 100, the 150, and the 200, right? This is lights out, dude. This security is getting sold off aggressively. And it's not bull mode back on until we're back above the 200, in which there was massive sideways consolidation on State Street, where funds are loading up on these dips, dude. They're loading. For every seller that's freaking out and selling this down, there are buyers buying this all the way down, dude. Because they know that State Street is going to come back above the 200, that red line, and we're going to sell it once the EMAs start going, the EMAs start rolling over, right? So I just explained how to use moving averages. Okay, the most important one for a newbie is probably the 200, because I know that if you start buying this security on the deep sell-off, right, every single time it gets hammered, 1, 2, 3, 4, 5, 6, 7, There's really no more selling after that, dude. It's straight up, dude. And then you could have kept holding, or you could have got out right here on these two red bars, dude. That's a massive profit move, because I know for a fact if you're averaging down all down here, you caught this move, dude. You caught that move, which is a huge fucking move for State Street, dude. I mean, the lows were down here in the 40s. You got out up here in 60, 61, 62, and it went higher over here, 65. So again, review. There's 3 dimensions. When the price goes below the EMAs, below the 200, is a downtrend, obviously. Price goes up when the security is back above basically the 8, the 13, the 20, right? And then it chops when it cuts, when the 200 goes flat. This is all sideways consolidation. This is where you just go to sleep and hold if you're a long investor, or you get out on these peaks and you buy when there's dips below the 200 again. This is sideways chop, right? Again, the 200 is flat. Here, the 200 is rising, which means the price of the security is going to go up, and so forth and so on. So, again, let's review. We're putting it all together, right? We haven't even talked about resistance lines, support lines, volume profile, or anything like that yet. The other thing you can add into the equation after you taking a price, and this is why I start with price first, which is the bars. The first thing you look for is a sell-off, dude, and you look for price reversals. You see this right here? This is huge selling, but this is people loading. They're loading because they know it's going to flip back, dude. They load here, they load here, they load here, they load here, and then it flips, and they take that profit. Okay? When you see massive movement down like this, death selling, you don't know who's selling, dude. But I'm telling you, there is almost there's equilibrium in the market. That's why it's so hard to trade, because there's always constant, almost 50-50, dude. It's buying and selling. And in fact, over the last 50 years, the only reason why the S&P and all these major indexes have gone up is because there's slightly more buying than selling over a 50-year period. So the price changes between the S&P one day after another. If you look at a bell curve and the distribution of that buying and selling, it's like there's like a fraction of a percent of more buying than selling. And again, if you look at this, that's why it's so hard to trade, because look, you got in here, and if you didn't get out, now the security is moving against you. And if you're new, you're freaking out. You're like, oh my God, dude, why didn't I sell up here? It's so obvious. No, it's not obvious, because you don't know that this is going to happen next. You just don't. You do not know. If you're buying here and you didn't sell here when 2 red bars took out 2 green bars, right? And you saw that this oscillator is sort of really reaching its peak right here. You're looking at this indicator down here and showing it's topping out. If you did not know to get out, and most noobs would sell down here for no reason. I mean, what do you think? State Street's going to go to 0? I mean, come on, dude. Think. Okay. You got here. You got in here, right? Guess what? Price of the security is now cheaper. You buy more, right? Oh, shit, you didn't get out here. No problem. Not freaking out. Price of the security is cheaper now. Again, the price is cheaper. Okay, you buy more. You're averaging down. The price of the security is dropping because you bought here, then you bought lower. Now you bought even lower. So this price that started out here is now dropping down. So you're getting a better price entry. So let's say you didn't get out here again, right? You buy more right here. You see what I'm saying? You're loading, and then some crazy shit like this happens, and then you need to sell. There needs to be a line for you where it's like, okay, it's pretty fucking obvious that I need to get out of the trade, right? These oscillators help you. I don't need, you don't need to know what they are. If you want to use them, you can use them. They help me time shit because I'm looking at a 2-hour time frame. Now, if you go down to a 5-minute and you trade strictly, let's say, actually, it's 5-minute, because that's like a real 5-minute is even crazier, because you can argue that the moves are more parabolic. So you can see some crazy shit like this. If you wake up and you see some shit like this, right? This is pre-market, right? These are buyers going in heavy on State Street, dude. Someone bought this up, right? And I'm telling you, the same people that bought this up are not the ones selling. So you also need to, you just need to, like, this will take you time to learn that people are staking buying interest in State Street, right? Big buying interest in State Street on a 5-minute, right? if you bought into this and it goes against you, first of all, shame on you, because you should not be buying into parabolic moves up. That's extremely dangerous. If anything, you should be shorting these movements, which I never do. I never short because the chances of a short working against you is high. Very high probability that a short will go against you, especially on a quality name. Okay? But this is all I'm trying to show you with the 5 minute is much harder to trade because these valleys are in some sense maybe easier to time if you're just patient and you wait for your green bars. You wait down here for your green bars, huge sell off. Right? You don't try to catch it. You don't try to catch the falling knife. This is the beginning of the day. 6:30 Alligate. 6:30 Alligate is getting sold off. Now you can enter the short, right? On a 5 minute. Alligate 5 minute, right? 2 red bars, take out 2 green bars. You're in the short, no questions asked. You ride it down. You ride it down. You ride it down, right? You ride it down until the price kicks above the moving averages, which happened right here. Right? It happened right here. You can see the price started going back above the EMAs. This is where you close your short. Okay? Don't ask me why. Don't ask me, oh, why? Why is it that way? Just do it. Okay? Do not sit here and try to rationalize this shit. Because unless you have a background in math and understand like deep shit about like price and shit, it's going to be very hard to understand like the price respects the moving averages is what I'm saying. I don't know why they respect the moving averages. Okay, some people will say moving averages don't mean shit. It's like, well, really? Don't mean anything? What the fuck are you talking about? The price went below the EMAs over here, start kicking back above the EMAs right here. What do you mean it doesn't respect that moving average? What do you mean moving averages don't mean anything? Of course they mean something. So you go in here, right? You set up your EMAs. The 8, the 13, 20, 35, 50, 75, 100, 200. This is an EMA fan, right? This is a 5 minute trading. This is different than a 2 hour. 2 hours is going to show you structure, right? And the larger movement in the market. The 5 minute is going to be helpful for the daily entry, right? So the question becomes where do you enter the trade? Well, you have 2 options. You either sit at your fucking computer all day long and you wait for this shit to sell off, right? And then you enter the trade at basically 11 a.m., which is basically the super low point of the day. And I know this is the low point. And I can explain this very simply. I know this is the low point because this candle right here is like the last hammer. It's called a hammer, basically. So they're just basically all this is like they're drilling it one more fucking final time into the ground to see if anybody will take it lower, and they don't. They flip it. The algos flip it right here, and there's buyers that step in, basically 5 pennies, like a nickel before it breaks down below 61. So unless again you're sitting at your computer all day long, waiting for the price of the security to break back above the 8 and 13, the better thing to do is to buy at the close. Now let's see if we can go down to the 1 minute and capture this right here, which I don't think we can. I think it just, let's see here. Yeah, okay, I see. Okay. Let's see. Load this. Where were we? Might have been here. It doesn't matter. So what I'm trying to say is if you want the best entry in terms of price, you can enter the trade before the close. Let's go back to the 5 minute. I should have marked it because the difference between 5 minutes and 1 minute is obviously like 5 1 minute candles make up a 5 minute bar. Okay, this is where we were. I see. Let me see if I can mark this and then go back to the 1 minute. I want to show you why you enter at the close. It's strategically better to do it that way. There we go. Totally different. Totally different, dude, on the 1 minute. So, this is amazing. So, here's the thing, dude. You got 2 options to enter the trade on a sell-off, right? You either sit at your computer all day, which I don't. I basically check the market only a few times a day, and you buy at the super low point, right? So I usually check and see the securities. Basically, I check in the morning, obviously at 6:30, and I may just see how the market's moving for the first hour. Then I'll take a break, for 2 to 3 hours. I'll get back to my computer around 10:30 or 11, basically 11. Then I'm starting to see, okay, it's about 2 hours to the close. So usually what happens is it's and this is why I like the 2 hour. So this is what happens usually during the day, right? Because there's only three ways a market can go. It goes down, sideways, or up, right? And usually the trend is always down, sideways, and up, right? And that's what you're looking to catch. You're looking to catch this momentum. You feel me? So if I would delete this because we're checking out the entry here. The first bars of the day, the first like 15 minutes of trading really sets the tone that the security will be moving for that day. So if it really is, there's indecision, right, and the price isn't really moving anywhere, likely for that day, the security will trade sideways, right? If they're selling right out of the gate, usually if it's selling right out of the gate, the security is going down, period. End of story. And if the security is popping off, usually that strength continues, usually. Okay. Now that's being said, let's talk about the structure of the day. Okay, the first 2 hours of trading is the most important. By 8 o'clock, 8:30, if there's a pump between 6:30 a.m. and 8:30 a.m., which is Pacific, right? First 2 hours of the day, usually algos will kick in and start selling off a security between 8 and 8:30 Pacific, right? And that fucks with people's heads because you get a run and then you see the market selling down. But because the thing is, managers have to go to lunch and shit. Like, not everyone can be at their computer 24/7, dude. Right? It's madness. So algos take over, right? And the bigger players go to lunch, right? They come back and around 10:30, 11 a.m., they'll look at how the market's doing. And then you can see that usually price reversal steps in around 11 and they carry it up either to 12 o'clock, right? And then they start selling it down at 12 o'clock. And then basically the last 30 minutes of the day are the most important, right? So securities will either sell off aggressively in the last hour of the day, or they'll pump and they'll start selling off at the end of the day, right? The last 10 minutes or so. What I'm interested in is not really if they're pumping the security during the power hour. I'm interested if they're selling during the power hour, and that's where I want to enter, right? I want to enter about 2 minutes before the close, 2 to 5 minutes before the close, right? So if you look at this entry right here, which is, this is 2 minutes before the close, right? So if you entered there, right, that's not a bad price, right? You're about 70 cents from the real true bottom, okay? But here's the thing, dude, and this is where you need to understand at least my methodology of trading. If you're only trading 5 securities, 10 securities, 15 securities, you can afford to get these price entries, right? You can afford to sit here and wait, right? Because you're only looking at 10 or 15 charts a day. However, this equation becomes way different, right? If you're looking at a lot of different securities. So this price entry here is fine by me. I don't care that I could have got a 50, 60 cent move that was better back here. Now, I could have checked 30 minutes before the market close and bought just 30 minutes down here, and I would have got a slightly better price. Okay? But I know that because they were buying it up right until the close, 5 minutes before the close, I know this is a high likelihood that this is going to pop tomorrow because it was in such a massive deep sell-off all day long. And of course it popped and I sell into it. So let me draw this. If you're a visual person, let me show you again my profit and loss. The reason why I trade so many securities is because I need to be diversified. You look at this security set and you say, okay, this motherfucker's only trading 5 shares, 20 shares, 10 shares. Yeah, I am. But look how many securities I have on, dude. Right? And honestly, when we go on Monday, I'm looking to buy more. I'm looking at ConocoPhillips. So let's go to ConocoPhillips chart, right? So I didn't enter the trade on ConocoPhillips because energy sold off, banks sold off on Friday, right? And I'll show you another tool that you might want to use to do fundamental analysis on what you should be buying when you should be buying it. Okay, so let me go to the 2 hour and show you the 2 hour. Again, market structure first, right? Market structure comes fucking first. Do not sit there and go into the 15 minute chart and okay, I'm ready to start trading on 15-minute chart. No, that's incorrect. You trade on a larger time frame first. You look at the structure. The structure is extremely bearish. I know that. I know it's extremely bearish. Why? Because we're below the 200. I just explained it. We are below the 200. However, that 200 is starting to go flat, right? It's really starting to flatline. It's going down, yes, but look, the last couple of days, it's been flat, right? So what happened here? Okay, we had a big sell-off right until the close. But in the aftermarket, they start buying up like motherfuckers, right? So what I expect to happen on Monday is a kick down and then it takes off. But I'm telling you, I'm interested in buying ConocoPhillips at this price because we are so sold off on ConocoPhillips, dude. Look, I know we're sold off because market structure. We go to market structure, we draw market structure, right? We say, holy shit, dude, this security at any price point was, look, the recent price was up in here. You're buying, dude, you're getting a deal. Now, of course, we just came from all this bullshit back here. But here's the thing, my friends. This is where we get into the different dynamics here, which is the larger EMAs. Okay. Now, this may be, and this is like another level of sort of another sort of dimension that you think of things. We're back on the 2 hour, right? Looking at market structure. I just showed you we sold off aggressively from where we were back here and all this price, all this shit up here, right? You're getting a deal if you're buying ConocoPhillips down here. Now, why do I know that? I can use the volume profile to analyze, and I can use the large EMAs. Now, I'm going to explain both of these things. Let me just make this smaller. Okay. Volume profile. All you need to know is shows you how big the volume was at certain prices. Okay? That's all you need to know. You don't need to make this more complicated than it is. Do not try, because it's just going to drive you crazy, okay? So what this is showing you is, again, volume at certain prices. So I know that if I look at the security right now, if it goes to 33 or below 33, that this is a good entry, right? This is a good entry if you buy anywhere in here, okay? I fundamentally know these things because, look, the volume is dying, right? And getting really low here, and then it starts hitting a floor, right? It's low volume here, and it hits a floor. Then the real big floor is right here because I see all the volume right here. Huge buying right here, right? And then there's buying obviously down here as well. If for some reason the security continues to move against you, right? There's big volume down basically this whole block right here, right? Now, let's do the opposite, which is resistance, right? Which I just showed you, right? We just sold down, right? We just sold down. So there's your resistance. This is your resistance. Now, here's the thing. This is a visible range. This is visible range. So when you zoom in, this changes. See it? See it change? So now I go in here and say, okay, what stays intact? Well, the resistance stays intact. Why? Because multiple reasons. I can see it visually on the left, and then I can see it visually on the right with the volume. I just drew these lines here as psychological support if I need to average down, because I know fundamentally that the volume will pick up at these levels. Now, personally, I don't need any of this shit. And I'll tell you why. One, I can always pull it up if I need it. I don't need to draw boxes. If you want to draw trend lines there, go for it. If you want to draw the rectangles like I did using the drawing tools in Tradingview, do it. However, I also use these EMAs. Now, as I just showed you here, these EMAs go from 8 to 200. Those are your most important short-term trading EMAs, right? 8 bars up to 200 bars. However, I have a different set of EMAs on all the time, which is an EMA fan. And this fan goes all the way up to 4,900 bars, dude. With the white line being the max, basically the max that Tradingview can load. So I know now that 4,900 bars back on the 2 hour time frame, my friend, that this security was this average price, this EMA was this 4,900 EMA. This is the average price for over 4,900 bars, dude. So if we just click this right here, and I'm telling you right now, dude, this is the ultimate price target for ConocoPhillips. I know that because although this EMA is going to go down over time, eventually the price will cut through it because this EMA is showing so much price activity. It's 4,900 bars, dude. It's going back so far in history and collecting all that data versus something like the 8-day moving average, which is much tighter, obviously, right? So we go into the 8 period moving average. We go back into the price action down here, right? I mean, you're not even out of the money that much. So if you bought down here, right, the eight is up here, so we're buying below the 8. So I know eventually I'm going to get my money back because, for Christ's sakes, that move is so small, right? Like it doesn't take that much for me to get a profitable trade because it can just kick up to the 8, the 13, the 20, the 50, the 100. It's all here. The 200 is right there. But I'm telling you, the 200 is way different than the 4,900, right? So I expect ConocoPhillips at some point go above that white line. Now, as you can see, the white line is going down because the price of the security has been hammered for so long. Let me just turn off this volume profile. Should load faster. So that should help you mentally. It should help you mentally in the sense of like, okay, I'm buying ConocoPhillips right here, right? It's in a massive downtrend. I know it's in a massive downtrend right now because it's below the 200. I can see just fundamentally right now, it's below the 200. It's getting killed, right? But I'm buying death. Okay, I'm interested in stepping in when there's death on the market. When it's like this, like, okay, if you go into a shop, right, and you want to buy a car, do you want to buy the car at the most expensive price, which is up here? Or do you want to buy that shit at the end of the year when no one's buying cars? Do you want to be buying a car during a pandemic when no one's buying cars? I want to be buying a car when the shit is so cheap that I'm getting such a killer deal, dude. You see what I'm saying? It's the same fucking concept, dude. Except this EMA up here is showing you a massive trend, dude. This is the big trend over years, this EMA, the 4,900 EMA, right? You know what I'm saying? It should be crystal clear, dude. And when you line it up with the 2-bar reversal in the 2-hour, you line it up with these indicators that are clearly showing down here, oversold. Okay, oversold. Okay, here's a little bit trickier, right? But you can see that the money flow is really starting to kick in up here. We're starting to go positive right here, right? And then they sell it down again until oversold. This is actually oversold right here on this bar, right here, right? And then we're oversold again down here, right? If you're just loading over time, if you're averaging in on the dips, right, you get out very profitable, dude, right? Or if you hold longer, wait until ConocoPhillips goes back to 45, right? You're just in the money. You're rolling in fucking dough all day long, dude. I'm telling you. Okay, I don't know how else to really explain this shit because this shit is just so fucking simple. It's so simple to use a 2-hour for structure, right? And you can get crazier. You can go down to like this chart right here, and you can pull up like this is the 2-minute. So you could like change this to the 2-minute. You could change this to right. You can change this to the 2-minute. You can change this to the daily, right? For even more information, change this to the 2-hour. Change this to. Okay. This is going to bother me 1 second. Okay. So I didn't move over all the stuff yet, but you can see here on the daily, dude, the same concept, dude. Look at this. Look at the daily. Actually, you know what? It'll be easier, just simpler if we'll go this way. The other way you can just check, you can check this before you enter a trade as well, is you can look at the same information on the daily, dude. Okay, this is the white line. Okay, the white line's telling you that the security is going to go back to 47, dude. I know this for a fucking fundamental fact, dude. Period. It's end of story. This This is the average price over 4,900 days. Is that right? Has ConocoPhillips really been around that long? Let me go to the month. Might be 4,900 days, dude. Yeah, 1969, dude. Of course. That's why the white line is showing up. So the white line won't show up on some of these securities because the price of the security hasn't been in the market that long. So I know that ConocoPhillips is showing so much pain, dude. It's showing so much pain, and there could be more downside, but I'm telling you, dude, it always kicks back above the white line, and when it does, dude, this shit's going to fucking 50, 60, 70 bucks, dude. And if you're long holding, that's fine. Now, of course, this is hammered in such a way that it could roll back down, and you can enter down here again, maybe. But I'm not going to sit there and wait on a maybe, dude. Now, the other thing is, here's the thing. And this is why I just pulled up the triple chart there, which is this function right here. All right. Let me load this. Yeah. So here's the thing you also got to consider. When there's two red bars that take out two green bars, right? It's a bearish trend. So there's a very high likelihood, excuse me, that the price of the security trades sideways as this 200 move is coming down and goes flat, or it continues dropping because two red bars took out two green bars. But the 2 hour gives you a good flavor, meaning that you don't necessarily need to look at the daily because the 2 hour is good enough. Okay, like it's still a huge time frame without getting too huge, and it allows you to profit from really sort of an impulse move back up versus the daily, which you would basically use the daily if you're a really big trader. If you're trading some large size, dude, like you're trading like, okay, I'm buying 4,000 shares of ConocoPhillips and I want the correct entry. I want the right price entry, right? So the daily, so if we were on a sell-off, right, pandemic, I would have stepped in with like 4,000 shares of ConocoPhillips down here. When these two green bars take out those two red bars right here, and then I would have held until that impulse move up right there when I would have sold out. Or I would have sold out here a little bit, would have sold out here a little bit, and I would have sold out here a little bit. And then I would be looking to buy back when this is exhausted, which it's not. Like, this is not exhausted because, again, they're still selling it down. So we'll go back to the 2 hour. I truly hope you will take this video into consideration because this is showing you market structure. It's showing you when to enter. Two green bars take out two red bars after a massive sell-off on a quality name. I know that this is going to just move back up because of the quality of the security. And it goes for any other major security. Now, there are some new securities that you could flirt with, like Chewy, for example. Pretty good company, right? Pretty decent company. Basically holding down here at 47, right? Bought more today because this is sold off. It's sold off back into this area right here, right? I expect this to pop up to 50, basically 50 bucks at some point because I know that they like this price right here. They basically like this general range right here. Chewy does not like to stay down in the fucking 38s very long, and I will be saving net liquidity if Chewy dips that low, right? I will not be like, okay, let's check it out, right? If I just bought right here at 47, this is risk management again. This is why I had to show you with the bars versus like explaining it in some detailed way, right? Which is like, okay, I only profit when I'm up 3-1 or 2-1 or whatever. It's like a lot of people say that shit, right? Looking for a $2 move with $1 risk, shit like that. Like, look, I just trade the bars. So if this is sold off, and in the next few days, I'm basically waiting for it to go back to 50 bucks, right? And this shit goes down against me. I'm not averaging down until it goes below 44. Okay, and I don't know how to really explain it other than like I'm not that out of the money. So if the price of the security that I'm trading, I bought at 47, and I start trying to average down at 45, that's not a very logical thing to do because my price target is above 50. Right? Basically up here, I'm waiting for the security to go back to 52, right? So what I'm trying to say is that you need to use some sense. Like if you just bought at 47 and you're like, oh man, it's at 45, I'll buy more. Well, if you have a lot of net liquidity, buy more. But wait until that shit really dies, dude. Wait until it's below, you know, this general range down here. And you can use the volume profile that I showed you earlier. You can load this up, right? And maybe it's down to 10. Right? So you can say, okay, well, you should be interested below 45. And that's what I'm trying to argue. I know that because there's a huge volume spike right there at 45.21. I'm interested in buying, okay? I'm interested in buying down here, really. That's the real juicy price right here, 42. Because I know there's support all down here. It's very, very, very unlikely that the price of security goes down to 42. But if I can get in at 40, basically 43, right? That's where I'm looking to average down, right? If for some reason the price of security continues to drop, I'll be looking to buy it below 38 because the volume just, again, look at it here. See, it just shows you the full fucking picture, dude. I don't know how to explain it. Like, you got to use some sense. You got to know that, like, okay, if this security moves against you, okay, think about it. You're buying down here and not up here, okay? You buy when there's a sell-off at the close, right? You buy at the close. You buy a sell-off. You do not buy, if you buy this security right here, when a green bar takes out a red bar, which is bullish, you're in a massive uptrend, dude. You need to be looking to get out when they're, on the next impulse move up, because you don't know when it's going to roll over. And when it does, you're out of the money for so long, right? Long term, you're going to be fine because it's a quality company. You can average down, but you get the point. Like, you need to use some sense. If you start chasing power, this shit can move against you. There's rules that, like, will help you. So it's like, because we're above the green moving averages here, when two green bars take out these two red bars, that's bullish. Because we had a sell-off down here, but we had a bullish reaction. Now we're having people taking profit, but they flip it back, and we're still above the moving averages, the short term, the 8, the 13, the 20, the 30. So you go back long, and then you get out up here when two red bars print, and then just sell it all, dude. You don't need that last impulse move, or sell like 50% of it, right? And then you look for another red move down, and you just get out of the trade. Like, because look, it always kicks back, dude. It always kicks back to the 200, and it likes the 200. And that's why the 200 is a thick red line. The 200 is set to be thicker, right? So you want to keep in mind that 200-day moving average because it's respected, right? So I hope this video helps. I mean, I know it's really long-winded. I'm really trying to go over the full picture here. Let's go to Koifin real quick. This is something I started using Friday. I just heard about it. Let's try to log in real quick. Don't want you guys seeing my password. Let me see. Trading@gmail.com. I just signed up. Just give me 1 second. I need to log in. I didn't fill the password on my password manager. What the fuck? Okay. Okay. I see. Okay. Okay. Now we're good. Okay. So check it out, right? This is Koifin. Now, this is interesting because it really shows you quickly. This is what I'm looking at right here. This is what I'm looking at. Okay. This is what I'm looking at right here. You see this shit? Oil services hit hard. So what do you think I'm interested in buying on come Monday morning? I'm interested in these securities: banks, oil, and gas. Why? Because they sold off, dude. Right? Now, here's the thing. Why? Oh, yeah. Wait. What the fuck? There we go. Now, check it out, dude. Let me just explain this general rule, dude. Let's say you're somebody that say, oh, man, I missed it. I missed the bottom. Okay? You missed the bottom, right? You missed the bottom of March. Do not fear it, dude. Because look at energy and look at banks. Look at financials and insurance. Look at MLPs, which I don't even know what the fucking MLP is. I don't know what an ML. This is I learn something new every day, dude. The point is this, dude. If you somehow think that you're like, you're not going to you're not going to be able to trade this market because you didn't catch the bottom. Look how much shit is still sold off, dude. Look at this, dude. Oil, banks are still down, right? Metals and mining is down. Insurance is down. REITs are down. Industrials are still down. Agriculture is down. Everything else is showing strength, from tech to internet services to semiconductors. You understand what I'm saying? So you still have an opportunity. And the reason why I like Koyfin is I can go in quickly and say, okay, regional banks are down, oil and gas is down, oil services are down. All this shit I'm interested in buying. I'm buying this up. I'm interested in buying on come Monday morning or at the close on Monday, because shit is getting hammered. Energy and banks are getting hammered. Now, here's the thing, dude. You can also buy ETFs, right? Which I'll show you in a second. But guess what? Let's see what ETFs got hammered. Basically, oh, I see. So it's by, let's do this as ungrouped. So Mexico's hit. Mexico got hit. Chile got hit. Indonesia got hit on Friday. I'll be looking at these ETFs on Friday. Let's see where they're at. Let's pull up right now. Why not? So trading, actually, yeah. Let's go trading. Let's go to charts. Okay. Let that load for a second. Okay. We're going to pull up. Where's the world ETFs? ETFs. Sorry. Right here. ETF world. See, I'm prepared. I come prepared, dog. Let's go. All right. So now I got all the ETFs in here. I can send you these lists if you want. So look, let's check EWW. So go check this out. Right here. There you go. Down 1%. There you go, dude. Look at this chart, dude. Guess what this is showing, dude? It's showing death, dude. Right? ETFs are extremely diversified. So what am I looking for? I'm going to be looking on Monday. Okay, are they going to be selling this down in the pre-market? Right? Are they going to be buying it up in the pre-market? Okay. I'm not too worried, right? I'm not too worried because I'm buying low. I'm buying where it's smart to buy. Look where the price closed on Friday, right? You're buying at the low point, dude. You're buying the fucking, of course it could always go lower, dude, but you wait, you say, okay, let's look at it, right? We're not truly oversold yet. Look, you can see it. We're not oversold yet. However, I'll start buying a little bit. I'll look and say, okay, we're not oversold. That's fine. We're not oversold yet. That's groovy, right? We'll just wait. We'll wait until buyers step in and then get some, right? But the Koyfin helps you quickly analyze, okay, and you can see it. Like, let's see the economies that hit the hardest, right? Indonesia, Nigeria, dude. These are long holds, dude. You can buy some Nigeria right now and just hold that shit. Hold that shit for like 3 years, dude. It's down 34%, dude. Get 34% on your money. You buy, I don't know, $1,000 worth of this shit. Hold that shit for a year. Wake up, $300 in your bank account, dude. End of story. This is how you truly trade. Now, obviously, there's some other factors that you need to be cognizant of. There's Nigeria ETF right there, right? Looks like I don't have all of them in here, but you just look at the securities get hammered, dude. Fucking hammered, right? But eventually, it has an impulse move, dude. It just kicks up hard. So again, same principle. Look, now this one is very close to being oversold, dude. Very close. The more they sell us down, the more I'm interested. So, you can wait until it's back above the moving averages and go in. Right? Look at that, dude. Just hammered. Right? So, look at this. Just getting squeezed and squeezed and squeezed and squeezed. You see the back the trend in the background, right? So it's all in its last move down, in my opinion, because there's just not really much more. I mean, for it to go back below 850, that's a huge hit. So you got to be smart. You got to say, like, okay, if you buy at the close on Monday, or if they start showing pre-market buying of this instrument, on Monday or Sunday night, you want to buy in slow because this is a long-term hold. because this security is likely to go back to 22 at some point. And you can go to the daily, right? Okay, and say, okay, let's check it out, right? Oh, this security's only been around since April. No. Okay, that's what I thought. That's what I thought. Okay. There we go. So since 2014 has been downhill. So Nigeria's been getting hit for years, dude. This is the super low point for Nigeria, dude. I'm telling you, like, this shit can still melt down, but you can also just use the daily for an entry, right? So it's getting sold down, it's getting melted down, it's getting melted down, right? You can wait until you get some big power bars, right? You can just wait until it price flips on the daily, right? And then just go in the next day and just hold, right? You get the point. But the 2 hour is honestly for a better entry, in my opinion, because it shows you basically the same impulse right here, right? So this is how you look for your market opportunities, dude. You can scan them quickly with Koifin, right, at the end of the day, instead of going here and looking at all these different look how many different lists I have set up, dude. I got everything, dude. Soon I'm gonna be trading securities in Hong Kong, right? You got Forex, which I don't trade right now, but maybe in the future. There's so many fucking different lists, dude. I even have them by price, right? Let's like look at the big fucking costly securities like Netflix, dude, down 6%, right? I don't trust this move. I don't think Netflix had enough pain yet, even though they're buying it up. I don't like how aggressively they sold it down, and I'm looking at 450 as an entry. Even though it's oversold, I can buy like maybe one share, right? I can buy one share today, but I'm interested. I might do that. I might see what the pre-market's cooking on Sunday night, but maybe look to enter at the close. Netflix is looking like a buy because it's so aggressively sold off, but I'm really interested in buying down here at 440, which is a huge push down. So I might buy one share and be looking to load down here in the 400s, dude. That's where I want to start picking up some size, right? So that's you can do it by price. There's so many different ways you can do it, dude. And then here's the other thing: if you have a lot of net liquidity, and you can buy different securities at different price ranges, it's good to do that. It's good to do that because your beta will be different, right? But you should also consider other things like bonds. So we go down here and go to bond ETFs. Right, these are some bond ETFs. So you can go to like TLT, for example, like some super safe shit, right? Again, I'm not really interested in TLT until it crosses below the 200, right? Which it did back here in July, right? It's been nothing but net for TLT. I'm just not interested in TLT until it breaks below that 200, which it always does, dude. It always breaks down to the 200, and that's your buy entry. That's when you should be interested in getting some of that action, so forth and so on. So, okay, we talked a lot about a lot of different things, dude. We talked about all this shit right here. We talked about all this stuff right here. This is a learning process, dude. But I'm telling you, if you just wait and you just wait for an opportunity for State Street, which I did on Friday, I bought at the close. This gaps down hard, gaps down aggressively. I will be looking to load when the buyers start stepping in on Monday, right? Buyers will step in eventually. It may dip down further. There may be more pain. I know there could be more pain because this EMA can continue melting down. The green ones can continue cutting and melting down. But I'm looking to buy more, right? You buy more. You don't freak out because, again, you have to look at the dynamics. You have to be looking at this like you would be like buying a car or buying a dinner or buying anything. When the shit is red, right? When it's troughing out, that's when you're looking to enter, right? When you're buying up here when there's red, you're still buying when the shit's expensive, dude. You're at the top of a range. You can see it, just huge run up. You do not buy up here, dude. Now, of course, it's in hindsight at some point. You can be looking at the price of the security about, let's say it's right here. Let's say you're trading right here, right? You don't know what's going to happen next, right? But you can see it, dude. You can see that the buying volume is going down. See it? See the buying volume peak right here? All right, see it peak, and the next bar is down, next bar is down. Next bar is down. The buying is slowing down, dude. And then it just dies. It dies. Also, it's telling this red line is helping and showing you to get out, right? The EMAs are starting to roll over. Look at the 8. The 8's starting to roll over. It cuts below the 13. It cuts below the 20. Dude, you're out. You're out of the trade when it cuts that thicker green line right here, the 20. You're out. When it cuts below the 50, you definitely better have been out of the fucking trade right there, dude. Because if you got in down here and you did not sell when you're below the 50, it's pain coming for you, right? So you get the point, dude. I mean, I hope this helps, dude. I really hope this helps because you buy when shit's sold off on a 2-hour time frame. All these other things like volume analysis, the volume profile, that shit can help you, but it's not set in stone. Now, one thing I will say is keep your eye on the futures market. So delete these lines real quick. Old lines here. So keep your eye on the futures market, mate. Like the futures tell you a lot. They tell you where we're going. And right now we're just still in an uptrend. But I'm telling you, look, you better save net liquidity, dude. You better save money in your bank. Because when the futures roll over, right? When the futures roll over, it's lights out, dude. It's lights out across all the securities and that's when you need to be looking to buy. Okay? You're putting risk on. I'm putting risk on by buying up here. But guess what? That's the dynamic, dude. You buy shit like State Street. I just showed you Koifen, which regional banks getting hammered. This is getting hammered. I'm buying. I'm buying cheap shit because I know this is a huge move up. And it eventually corrects below the 200. And that's why I save money in the bank, dude. I save money in the bank because I know that sometimes there's 2 or even 3 or 4 days of fucking selling. And I want to buy on that 4th day when things are looking so dire, so fucked up. Everyone's like, yo, the bear market's back in. We're fucked. No, we're just on a fucking correction because all these assholes up here start buying these securities all back here and they're selling out here, right? They're selling out here. They're selling out here. They're selling out here. They're selling out here, right? They sell more right here, right? They unload more. So they unload all on they're buying, you know, it's an equilibrium, dude. I don't know how to say it. It's going to be tricky because there's always almost an equal number of buyers and sellers in the market. It's almost 50-50 with a slight percentage increase on the buying side. That's how the markets continue to go up, right? But you can see that, look at this overall trend. We know the big support is down here and on these at these EMAs right here. I know that because I can see this and I can say, okay, just by looking at this, I know that this is very, very fucking unlikely that we will cut below 3,000. But I'm telling you, dude, you keep your money in your bank ready to deploy if we dip down below that level. And when there's a sell-off, dude, you have got to wait. You have got to be patient. You have got to wait and say, okay, the overall trend, this is why I keep my eye on the futures market. The futures market is printing death. Until there is power in the futures market, I am not stepping in. Okay? You need to respect the futures market because it's the most liquid, diversified instrument in the world. There's arguably more liquidity in the Forex market, but that's not diverse. Okay? These futures securities on the NASDAQ futures and the E-mini 500, S&P 500 futures is extremely diversified. So you keep your eye on this. You want to know what this is showing you on the 2-hour because when it goes bearish, when it cuts below that 20, it's fucking lights out, dude. It's fucking lights out. And you wait and you wait and you fucking wait and you do not sit here and buy shit until you get a push up, right? You look for that quote unquote death drop. And that's when you go in. You got another death drop right here. Okay, you got another death drop right here. And it just stops. I don't know why it stops. Buyers step in and it's push. There's a massive push up, right? So I hope this helps. Look at the futures. The other thing that can help you is inverse ETF flow and VIX, right? When you see that there's big buying pre-market or aftermarket, look. So let's go over here. Sorry, turn this off. That auto scale shit's so annoying. If your charts feel locked, if you're scrolling through Tradingview, if your charts feel locked, you just go here and you turn off auto fits data to screen. Now, look, if there's pre-market heavy buying of volatility, look at this. Heavy pre-market buying of volatility. I'm telling you, I also keep my mind, or sorry, I also keep my eyes on the volatility indexes, because when they start stepping in and buying the volatility up, I know it's about to kick, dude. I know it's about to fucking kick, and it kicked because there was pre-market buying this instrument. So I know that they're hedging pre-market because there's people lining up their sell orders, dude, to dump securities. So you got to know when there's down days. And I'm telling you, this is basically when there's volatility increasing, it's usually mean they're selling it off. And when volatility is going down, it usually means there's buying. And right now, on Friday, you can see we're starting to get oversold on that volatility, meaning that we're really starting to hit the upper bound on the futures market or the overall market. So that's why I'm interested in potentially selling this week, even though that some securities may run like State Street, right? I'm interested in building a position in State Street, but I'm respecting that at any point this fucking kick off in the fucking volatility, and then there could be selling pressure. Now, the same thing applies to these inverse ETFs, which I'll show you right here. You got to be careful in what you're buying, because some of these, first of all, you don't hold these more than a day. But the same thing applies when there's pre-market buying of this security, right? This is pre-market. This is a 1 a.m. bar, dude. Look at this. This security is traded 24/7 during the week. So this is huge pre-market buying of this instrument, dude. I'm telling you, by 7 a.m., it was on, dude. It was on like Donkey Kong, and it didn't kick for another like 3 or 4 days. And then they sold it down. So be aware, okay? Be fucking aware, right? That these instruments that are inverse ETFs, meaning that these go up when the market's going down. You do not hold these more than a day, but just be aware that these can really aggressively kick off, dude. And they kick off during the pre-market, right? And usually they're selling, right? You can and they took it right until the close, right? So they're still buying this instrument. So I expect some potential selling this week in a big way, right? Because their buyers are stepping in right here to hedge. But sometimes this is also hedging. So the most important thing is to look for the pre-market buying, not aftermarket buying, but pre-market buying. So if you saw this instrument being bought up right here in the pre-market, right, you want to set your buy orders for this instrument down about 30% into this candle, right? But be aware that like this is also hedging, but usually, again, all I'm saying is when the VIX and when the inverse ETFs are being bought up, then usually it's on. It's usually on for selling. So just be aware that if you're interested in hedging. So that's it. Those are all the things you basically need to understand in thorough detail if you're going to trade this market. Use the 2-hour time frame. Get some more skills with regards to general market awareness, right? That's probably a big thing. And yeah, just trade the 2-hour time frame, dude, and then look for the entry at the close using the 5-minute, right? So if we go to again, we go to any security here. This is a bank. So we go to the 5-minute, change this to the 5-minute, right? And we say like, look, dude, look again, dude. Look at this, dude. Look at this. This is perfect. This is exactly what I'm fucking talking about, dude. Look. We almost got down to the swing low, dude. Right here. Huge sell-off MTB, right? I'm not chasing MTB. This is not sold off yet, in my opinion, right? Unless the buyers really step in aggressively and really flip this back up, I'm not interested, okay? I'm not interested in the security until it really gets pushed down below 98. Because to me, this is on a big downtrend. Yes, they're making higher highs, but I need to be given a little bit more here, because we're not sold off technically. I need to see like divergence here. This needs to flip green, or there needs to be two green bars right here before I'm really interested. But if I were to buy this instrument, it would have been at the close. It would have been right there at the close, dude. 5 minutes before the close, dude. They just dropped it on your fucking head at the close, dude. Right? You thought it was going back up? Nope. Sold down again. Better entry, right? Just aggressive selling down this instrument, dude, right out of the fucking gate. 6:30. You didn't even have a chance, dude. This is an impulse move in terms of a very tight, short time frame. And then it's just straight down, dude. Straight down. And you just buy that shit. This is a hammer. This is a good sign. This is a lower high. But they hammered it down. The big test is going to see if it goes below 99 in the morning. and we're not technically oversold until buyers step in on the 2 hour. So this may be sold down on Monday, but dude, I am looking to buy this shit because CoinFin's already showed me. I don't have CoinFin, but you saw it earlier. CoinFin is showing me sold off on banks, sold off in energy. I'm not going to sit here and run away from energy if it's being sold off, dude. I'm looking to buy quality energy companies if they sold off, dude. Right? So you get the point. You look for the sell-offs. This is the hardest fucking part, is to be patient. Wait until you have clean trends. These are huge buying. This is huge buying pressure. Okay, someone is just stepping in aggressively and buying this, dude. This is pre-market. This is also pre-market. So someone just wanted to go in at those prices, but that does not mean that the trend is exhausted. You need to understand what the difference is between a pre-market bar and a regular trading bar. Because here I told you to turn on the extended hours and turn the opacity down, because I just don't like to see I can look at that bar and see it's 5 a.m. Right? So you see what I'm saying? Someone wanted to get in, but it's not necessarily the best price entry. The best price entry is below the moving averages and when there is a flip, which you saw here, right? Which you saw here. This is a flip. This is a flip right here. Sell off, flip. And they flipped it in the pre-market by 7 a.m. You could have been in the trade. You could have been out at the end of the day and made money. So there's no real excuses. And then you always have the ability to average down on a deep sell-off. Do not start buying this instrument if it only moved 50 cents against you. You're like, oh, not time to average down. It's like, dude, wait until this shit is sold off again hard. Look at this. You bought here. You got fucked. You just didn't get out. You didn't get out of the trade. You didn't get out of the trade here. You didn't get out of the trade here. That's fine. It sells off aggressively. You buy more, dude. Comes up. For some reason, you didn't get out. It's sell off, flip, pre-market, 5 a.m., 7 a.m. You could have sold out, dude. 9 a.m., 11 a.m. You could, dude. You have to take profit. All I'm saying is you wait to average down. If you fuck up the trade, you get in when there's a sell-off on the 2 hour. You look here and you look and say, okay, we're selling off. The trend is selling off. There's no buyer stepping in, dude. This is not telling you to buy on the other indicators. If you're more visually inclined just to glance at these indicators right here, this is telling you a pure price move down. You do not sit here and try to counter trend trade and say, oh, I'm going to buy because it's just showing red. No, you wait until the end of the day, or you wait until there's a price flip. And I'm telling you, the next day when you wake up, you'll have the ability to, one, either close the trade at a profit, or if it moves against you, you're not freaking out because you're buying a quality name like MTB. You're waiting for it to sell down more. Wait for the price flip during the day, maybe, where you really know the buyers are stepping in, and then you buy more. And then it brings your average down because the security has dropped like, fucking $4 or $5, right? Then you buy some more, you get the point. So I hope this helps you. If it doesn't help you, let me know. But this shit should really be solid for you. If it doesn't, if somehow this doesn't help you, I don't really know what you want, because this is how professionals trade. They look at a large time frame next to a short time frame. They look at moving averages and say, okay, we're not above any moving averages yet. We're above a moving average here after a sell-off. I'm in the trade. I'm holding the trade. I sell out right here, right? The time to profit is very tight unless you're trading on a very super long time frame, saying like, oh man, I got an MTB here. I'm just going to hold MTB for fucking 2 years and wait until that shit's maybe above 129, right? Which is the prior high up here, right? You can wait 2 years on MTB and it should be fine, right? But you might be holding that for two years because this could sell down below 84. This could sell down below 91. This could sell down below 96. I'm just looking at the prior lows here and say these at any point can be retested. So although we are deeply sold off below that huge EMA up here, do not expect this to just jump to 149. Okay, this is going to continue to sell down, right, until we're really out of the pandemic and the banks get repaired. But you need to be looking at the opportunity to enter the trade with and CoinFin showed you that. It showed you the opportunity. It clearly showed you the opportunity here, right? Let's go back to it. All right. Look. Sectors. The yearly is right there, dude. It's telling you that these are the things that you need to be interested in because those are the opportunities to buy. Look, I don't know what MLPs are. I have to look at what MLPs are, but the same concept. Financials, insurance, oil, gas, and regional banks all hammered, dude. Okay? You can hedge by buying basically anything that's showing strength. So for the things that showed strength, look at all the shit that's showing strength, dude. You hedge your portfolio by buying shit that's strong. Okay? This is the shit that's strong right now. Home builder, software, technology, biotech, semiconductors, gold miners, clean energy. All this shit's strong. Internet, healthcare, strength, communication, strength. You buy this shit when it sells off, right? But you're buying it because it's strong, right? You're hedging by going long on these things that are deeply sold off, but you're still buying these things that are deeply sold off when there is a sell-off on the 2-hour. So that's why I'm interested in State Street, even though it's being sold off, right? Because look, I'm buying right down here where the prior range was, right at the close, right where the money is. And you can see that in the pre-market, they start buying it up. Sorry, this is the aftermarket bar. Right there on the 5-minute aftermarket, they're buying it up. That's why I look at both time frames. I'm looking at, okay, motherfuckers, who's buying up during the aftermarket? Someone is. Someone just pushed the price of the security up by 30 cents. That's probably a large order. To move the book that much is a large order, right? So you get the point. Line it up. 2-hour, 5-minute. Do some fundamental research with Koifin, which is free. Buy Benzinga Pro if you need it to import your news and look at the news, right? You can use the scanner function right there, and Benzinga is really easy to use as well. You can look at the IPOs in Benzinga if you like the IPO game. Read the 10Ks, right? Like that was what someone listed in here. SEC filings, like that's what you want to read. The only time you would read an SEC filing is if you're interested in a IPO, right? You get the point. So I'm gonna end it here and get this uploaded. Go get some food. I hope this helps, dude. Like I was telling you right now, dude. I was not making any money day trading. I made money in the crypto market 5 years ago, as I said at the beginning of this video, because I long held crypto for 2 years. Then I lost everything because I didn't sell it when it peaked out in 2018. So I'm rebuilding because I'm just smarter generally about this game. But I didn't get the hang of this trading shit, day trading from a truly day trading perspective until I understood these concepts. Huge death on the 2-hour. Huge fucking just driving it down, making your life miserable if you went long only on State Street. And then they start flipping it up. All right, they start flipping it up. They start flipping it up. They start flipping it up. This is the range right here. If I wanted to add more, I am not buying until it breaks below the swing high, which is basically $61. So I'm not buying until it goes below 61. All right. Now I can just leave that line right there. All right. And know that, like, okay, this needs to drive through 61 and basically break down probably into the 59s before I'm interested in buying more State Street, because I'm already buying when this shit's died off. And this goes for anything. ConocoPhillips is like something I should have bought on Friday, but I didn't. I just didn't check. And sometimes it's hard to check when you have all these securities to look at. All right, but Koifin really opens the gate because it shows you, again, daily, right? Daily, what is getting hammered. These are the things that you're interested in, right? And I'm interested in the shits that's more sold off than the others. So yeah, I hope this helps. I'm gonna get this uploaded, and thank you for watching.